First, I would like to say that I'm really happy to be here today presenting at this webinar. And I just wish we were all in the same room. So I'd like to say hello to those of you I know and those of you I don't know as well. And I hope we will meet one day. Many people in the audience know that EBRD has been investing in funds in Central and Eastern Europe now for close to 30 years. Over this time, we have invested into 50 fund managers in Central and Eastern Europe themselves through about 100 funds, and these funds have invested in about 800 portfolio companies. So it's a seizable portfolio. We've had an important role seeding the private equity in that region. I would like to start with an important figure, which is the returns that we have achieved through this portfolio. So if I take the fund that have raised more than one fund, and I looked at the pooled IRR of all these funds, I get a IRR of 12% of our liquidated funds. That's a very good figure. Another figure I can say is it's close to 17% if we look at the growth returns. So looking at the underlying investee companies. So we're very proud of these returns, and everybody who isn't familiar with the region should take comfort that it's a good idea to look at it. And those of you who are already in it, we can congratulate ourselves. These numbers are without survivor bias. So we don't pick and choose. We don't sort of, edit what we don't like. So we know this region, and our portfolio shows that it's possible to make money. Why is that, and how does that happen? So we see that Central and Eastern Europe is quite often overlooked as an emerging market in comparison, for example, to Asian market. Yes, it's true that the growth rates are lower than in other emerging markets, but so is the risk. And as Eric pointed out in the slides he showed just now, the growth rates in Central Europe have also been higher than in Western Europe. So we feel as a result that there is really a place in the portfolio for Central European funds, somewhere between developed and emerging markets. Why is that, and what underpins this? We see that the themes of convergence with Europe and the increasingly wealthy middle class are still themes that underpin the economic growth and are underpinning also investment themes for our fund managers. Central Europe also really has a number of fund managers that have raised succession of funds. So you can see there several fund managers that have raised many funds and have a proven track records over a number of funds. They have also, over the years, a broader and deeper offering with many different strategies also that have come through. In particular, on this point on strategies, I'd like to mention in the last few years, Central and Eastern Europe is being increasingly recognized for its strength as a tech hub. And we see this with the caliber of the tech talent that's there, some of the investee companies and some of the success stories that have come out, as well as some of the GPs who have come through. The PE market in Central Europe also is really a less saturated PE market. We see very much the stories in Western Europe with dry powder, pressure on pricing. But with a market penetration in CEE of about 20 to 30% of what it is in Western Europe, there is really less pressure on pricing. GPs face less competition, as a result of which they very often have access to proprietary deal flow. It's not uncommon for them to even reach out straight to first generation owners. Another aspect of that market is with harder fundraising, we see GPs with better alignment of interest with their LPs, which is also, of course, a positive. And we see fund managers that are really focusing on their own strategies and are driven by getting a carry from their strategies and their funds, rather than raising multiple funds and just focusing on the management fees. So this is why that there are so many compelling stories. One point that Thierry just touched upon is that we're looking at the number of years in the report, but of course 2020 is a year where very important things, of course, have happened with this COVID crisis. And what we have seen in our portfolio, which I just want to underline quickly, is that that portfolio has been resilient through the COVID crisis. And this is because there is a lower use of leverage than in some other markets. The GPs are focusing on operational improvement and not so much on fancy financial engineering as a source of returns. They roll up the sleeve, add value to the companies. These GPs were really already focused on adopting defensive strategies, so this is nothing new to them. And these GPs in the region also have experience in dealing with crisis. It's not the first one and it's not the last. You have resilient GPs who know how to handle this. And we saw really through our portfolio, again, it's not the first time, it's another crisis where they react really quickly, supporting their existing companies, putting in place whichever contingency plans are needed, communicating with the LPs appropriately. As a result, we saw really deal making quickly resuming. So there was a bit of a lull in the first half, but then immediately Q3, Q4, we saw new transactions and also exits, which we felt is very encouraging. So in summary, for investors out there listening, if you can overcome that risk perception gap and appreciate the value that's created by the managers and the GPs, our experience shows that there are great opportunities as well as opportunities for allocation and opportunity also for returns.
Terrific. Thank you, Anne. Thierry, would you like to add to Anne's remarks about what the ecosystem is currently looking like today?
Well, the first thing I would say that I fully concur with Anne's assessment. I mean, fundamentally, our industry in CEE today, as compared to 10 years ago, is bigger, deeper, wiser, more institutionalized, and more integrated. I mean, bigger, the numbers are in the report, I won't expand on it. Deeper, all segments are thriving, from early stage VC to large buyouts, with actually a remarkable growth in the VC segment lately. Wiser, Anne mentioned it, several GPs have gone through multiple fund cycles and learned as a result. More institutionalized, succession has been completed at several GP firms, and that usually tends to add to institutionalization. And we can see more and more blue chip LPs joining the party. And it's more integrated, because we have an increasing number, I mean, it's really noticeable now, increasing number of secondary exits to other CEE players, which, at some point will create almost a seamless food chain.
Thank you, Thierry. I think that the audience obviously really wants to hear now about the report and the case studies themselves, and also the dots that connect them and what separates them. So over to Bill, who has led the work of the task force in producing this report, to explain for us what really are or were the key investment and value creation strategies that you found for the region as a whole through the report.
Well, thank you, Eric. I mean, I had essentially the job of trying to take the environment and say, what are you going to do with it? It's great to be in a sunny, windswept, attractive beach, but what do you actually do when you go into the water? Can you enjoy it? And in Central Europe, we have a large number of GPs that have been very successful in investing. And in the publication that was released today, we identified 22 of those stories. When you look across those stories, though, there are some things that come out. First of all, the Central European GPs, like GPs everywhere, are very good at spotting an opportunity. They're very good at identifying a specific advantage or idea that a company has and turning that into a great business and ultimately great returns for investors. The book looks at the case study of Bitdefender, which was a deal by Access in Romania, as well as a Hungarian deal from Euroventures, both of which took their opportunities and the good ideas of those businesses' founders and turned them into success for their LPs. But Central Europe is not only about that advantage and making an investment in a good idea or a good opportunity. Central Europe, as Anne and Eric mentioned, is also supercharged in terms of growth. And that gives us a tremendous advantage to do some other things. One of the things we can do is take advantage of what we call in the publication catch-up. Others call it convergence. the idea that a business in Central and Eastern Europe can follow the path of existing businesses in Western Europe and catch up on areas such as digitalization, the introduction of market trends, or other opportunities. The publication highlights a number of these successes, Dino and Profi from enterprise investors, both situations where the GP was able to create a new market segment and a new opportunity for their businesses, as well as a business called Famicord that took the revolution in stem cell technology and brought it to Central Europe, and Rankomat, a deal from 3TS that introduced one of the first online car insurance marketplaces to the region. Again, these companies were successful partly because they were able to benefit from that fundamental growth. One of the other themes that's talked a lot about in investing in Central Europe is ownership transition. I've said at a number of conferences myself that the family business doesn't really exist in Central Europe because most of these businesses are first generation. They haven't had the chance to transit yet. And GPs in the region are very good at identifying and managing these situations to unlock the potential of someone's business and turn it into a company. There are a large number of examples of this in the publication, deals such as Anvis from ARX, as well as AZ Klima in the Czech Republic from Genesis, and our own Home.pl in Poland. Breeze also was able to make a strong return with their Novago investment in a waste recycling business, capturing the professionalization and the institutionalization of that industry, as well as Swell and Velvet Care, both of which managed the transition. Velvet Care is an interesting case in particular because that was a corporate orphan that was turned into a 13x return for Avalon's investors. The other trend we see a lot of in Central Europe is consolidation. The markets in our region remain fragmented. They're relatively young. There's still a lot of growth companies, but 30 years on from the fall of the wall, you're starting to see the winners emerge. And private equity has become very good in Central Europe at identifying the winning platforms around which they can build even bigger businesses. Our success story book highlights Virtualna Polska. Innova, the lead GP on the transaction, and the founders of that business managed to do some 15 add-ons to create one of the leading web portals in Poland and generate almost 3x for their investors. Urgent Cargus, a deal in Romania, put together two large-scale courier companies to catch the wave of the final mile delivery and the digitalization of commerce in the region. KVK Holdings, a construction materials business from ARX, followed a similar path, as did Dotcard when they put together two businesses to create one of the leading omni-channel payment systems in Poland. But our GPs also have an ability to create some of their own opportunities. And the last theme that we see emerging is what we call being a catalyst. We, I think, all have seen good businesses that just lack something. They lack the management capability. Sometimes they lack the capital to expand. Sometimes they just lack the vision and drive to make them a success. And we were able to identify a number of these deals as well. Bambi and Kjan Miloš in Serbia from Thierry's MEP, but Magnetic MRO, MSV Group, Deutec, and Phytech, all are examples of how GPs were able to take a good business and turn it into a great company. These are the main themes that we identified, and I think it's important when we look at the region to also remember that this range of themes also reflects the heterogeneity of our region. It's not only about doing one thing in one place. Central Europe is a diverse market and offers diverse opportunities. And our GPs, from the venture space through to the more mature buyout areas, all have their specializations and focus. And that allows us to capture the opportunity to capture that growth and very much capture the dynamic that Anne was talking about in her remarks.
Terrific. Thank you, Bill. That was nicely captured. Forgive the pun. And I wanted to ask you, moving on from Bill's, I think, very pointed observations about the themes and the heterogeneity and the performance of the case studies as they came about, we're also, I think, having to ask the question of what are the kind of economic and social impacts of the industry in the region today from your perspective, please.
Thank you, Eric. It's a very good question because I think this is a question that's of growing importance for LPs globally. And I would say to that, CEE does extremely well. So that is a market that was seeded initially by DFIs, by ourselves, our colleagues from EIF and some others, as a result of which all the ESG considerations were integrated into the GP investment mandates right from the start. It isn't something that is being added on now. It is something that was part of the investment thesis of the GPs really from the beginning, with focus on governance initially, and then increasingly environmental, and then social. And I think on that, I would like to just cite one figure, which comes out of another excellent Invest Europe report, the PE at Work paper that was published last year. CEE had the highest job growth, which was 11% in 2018, among European PE-backed businesses, and that was followed by the Nordics. What we see in the existing report that we're launching today is that these companies mentioned in the report created a total of 25,000 jobs. And we can say that this trend is continuing. So, you know, the same with obviously tax contribution, training, diversification, etc. So I would say GPs in the region are doing very well on this front. It's just part of them. And the numbers are there to prove it.
Terrific, thank you. And Bill, did you want to add anything on that point as well, given the previous piece?
Well, I think, you know, as Anne said, when I first started investing in Central Europe in '91, you were more concerned about environment. And I can remember being taken to some fairly horrendous sites and factories and things like that. But we're now 30 years on, and that has largely been dealt with. But ESG remains a part of our blood. And certainly in our firm, one of the things we focus on now is the G part of it. And every portfolio company that private equity goes into essentially gets a lesson in what correct governance is. They move away from the idea that one person can make a decision. We create boards, we create teams. You know, in our first fund that we manage, you would probably come to the investment committee and say, I found a guy with a great idea, he's going to make my money. Today, the investment committee discussions are about the team. They're about the president, but his CFO, his marketing director, his HR director, and all the other functions that come together. And I think that has been one of the big contributions of Central European private equity to the ecosystem, setting those good examples, showing not only the president what it's like to have a board, but showing all the employees in those businesses what governance and correct governance is all about.
Absolutely. We're going to move now to the final question, of course, and I'll ask for all of our wonderful panel participants to try to keep it brief, maybe the highlight, in which they outline for the audience, what do they really think the future holds at this point for the region? And then we'll leave 5 minutes at the end for any questions from the floor, which we strongly encourage folk to please submit. Perhaps, Thierry, if I can kick off with you about what you see the future holding for the region.
Well, I have a clear conviction. The future is bright. I mean, the PE and VC ecosystem in our region is poised to grow and prosper, as that particular region is very well placed to take advantage of some long-term structural trends, which may sound obvious to you, but it's always good, you know, remembering it. The first one is obviously digitalization. It will be a boost not just to the VC tech segment, but also to the growth capital and buyout players as the traditional industries move through modernization and adjustment. Deglobalization will be also a big booster. with the nearshoring and the shortening of supply chains, there will be lots of investment opportunities coming to our region. And the third key trend I would identify as supportive of PEVC in the region is obviously the accelerating integration, economic integration of Europe. Central Europe has the human talent pool, the geographical proximity, and the cost advantage. It should benefit. Now, more specifically, I would also expect VC tech to outperform, as this segment is not really dependent on domestic market size or country conditions. It's really an easily scalable global game. And in that sense, the example of the Baltics is very much a preview of what's going to happen next. I would also expect increased blurring of the boundaries between late-stage venture, growth capital, and buyout. As I mentioned earlier, I can see an integrated food chain developing with lots of exits being provided by participants in the system. And hopefully, we'll see the emergence of local LPs on a significant scale, and that would greatly help the resilience of our industry in the region.
Terrific. Thank you. And would you like to give us a final bullet point before we move to questions?
I think Thierry has made the case extremely well. The only thing I need to add to that, or I would like to add to that, is that the returns that are generated by the region will continue, and will continue to prove that this undercapitalized part of Europe can really add value to LP's portfolio.
Terrific. Thank you. Bill, with your understanding, I'm going to hand over to my colleague, Maria, now, who's very kindly been vetting the questions from the floor, of which we hope there's a deluge, given the over 100 years of experience on the panel today. But Maria, perhaps over to you for questions and eventually the respondents, please.
Good afternoon, everybody. So the first question for the panel, which is actually a very interesting one, is which countries, in your view, of the CEE region offer the most opportunities for private equity and venture capital in the coming years?
Bill, would you like to give I didn't give you a shot in the previous one. Would you like to take a shot at that question?
Well, those from the region know that my fund is called Poland Plus, so I have to stay loyal to the name, and as they say, we do what it says on the can. So I think Poland does offer tremendous opportunities. It's a large economy. It has, as Thierry was mentioning, all of the layers where you can play, from big buyouts through to growth capital and down increasingly to venture, which has been one of the focuses for development of the Polish governments, and there's a lot of capital available to seed ideas. So I would still go with Poland. I think, though, you can find opportunities throughout the region. And what's encouraging, if I take a CEE task force perspective, we have very active associations composed of very experienced GPs throughout. So I come back to the prior question. I was going to say, I'm expecting a lot more of the same, but from increasingly experienced players.
All right, thank you. Thierry, would you like to take a quick shot at that one? We're going to probably try to spare Anne, but go ahead, please.
I think my answer would be, it depends. Because the 5 investment themes which Bill very accurately described are going to play differentially depending on geographies and levels of development. So depending on the sort of strategy and investment focus one is comfortable with, you're likely to go more into certain geographies and certain sectors rather than others. So I can see opportunities across the region. Now, volume-wise, obviously, Bill is absolutely correct. Poland will continue to dominate. It has a deeper system from VC all the way to big buyout. But there are opportunities in some of the underserved markets as well.
Thank you. We're going to have, I think, an opportunity, Maria, maybe for one quick final question. It's 29. We've still got 216 people on the call, which is wonderful. But please, go ahead.
In which case, I think we will go probably for one for Bill. You mentioned tech talents being present in the CEE region. Which tech domains do you see sees strengths in?
Well, I think I would make a distinction in a way between pure tech, which is perhaps something like cybersecurity, where you're really developing a software, you're developing the vision analysis or vision technology that underlies certain developments. You have those in, I think, all of the countries, and you have smart people in all of the countries. What's really interesting to me, though, is the opportunities to apply tech and the increasing adoption of tech by businesses throughout the spectrum. One of the things we've done at V4C is really focus on how small and medium-sized enterprises are getting tech delivered through software as a subscription, through various marketplaces, through various platforms. And I think you'll find tremendous opportunities throughout the region to invest in areas that are delivering and accelerating the ongoing digitalization that's only become that much more in the last 9 months of COVID.
Thank you, Bill. Everyone, thank you very much for your time, ladies and gentlemen. Have a lovely evening.